Good morning. Good to be here. Good to see all of you. Hopefully, people are finishing their coffee and breaks and coming back in as well. And I think it was a great start this morning from Don, Sarah, and of course, Mike and Scott. I really liked the closing of Mike. Culture over short-term thinking, execution over strategy, and passion over experience. I wanted to make sure I repeat it so that I remember it and can implement it in day-to-day life as well. So great to be here today with my co-panelists. My name is Dennis Gada. I'm the Global Head of Banking and Financial Services at Infosys. Infosys, as many of you would know, is a global digital technology and operation services company, about 18 billion in revenues, and really global in terms of our reach. And with me here today is Raj Bharadwaj. Raj is the EVP, Head of Operations and Global Services, Enterprise Operations and Global Services at Tourist Bank. Raj has been a senior leader in the banking and financial services world for several years, first with Wells Fargo, now with Tourist, and previous association with some consulting companies as well, and very well known in Charlotte. Raj is also the chair of the World Affairs Council of Charlotte, the WACC board, and what some of us know, he is also a very good tennis player. So you'll see him in many tennis courts around Charlotte as well. So Raj, welcome, and thanks for doing this chat with me today.
Thank you. I appreciate our friendship. I appreciate our partnership. Infosys is a valuable partner. And one small correction, I'm a tennis player, but I'm not very good at it. So.
Great. So I think, just to a little bit frame the context for this discussion as well, I think, these are interesting and challenging times for the financial services industry. I think, in fact, during the pandemic, the banking and financial services industry was quite resilient, right? It was part of the solution. A lot of things that happened during the pandemic, the industry actually grew and benefited from it. But obviously, in 2023, towards the end of 2022, things have changed a bit directionally. There was a banking crisis here in the US, which is stabilizing now, and we'll talk a bit about that. Inflation, recession, and various other macroeconomic factors that come into play. And I personally believe that any crisis or uncertainty kind of a situation is actually a great opportunity, and firms that can navigate the changes during this kind of an environment really emerge more successfully. And I think that's kind of what we wanted to talk about today, how to navigate the change in the financial services industry in today's uncertain times, but also times where there could be a lot of opportunities. Infosys, the broader purpose of Infosys is to really amplify human potential and provide opportunities to people, to businesses, and to communities to make the most of the opportunities with the power of technology. And I think Tourist also has a very shared purpose, right? For Tourist, the purpose is really around inspiring to build lives and communities. And again, both the firms really are focused on how to leverage the power of technology, the power of digital to make a huge impact. And I think those are some of the topics we thought we'll chat about today. So Raj, I think in the context of today's environment, high interest rates, real estate market in turmoil, mortgages especially, but also commercial real estate, inflation, recession fears, etc. So there's a lot going on, right, in the industry. It'd be great to get some of your perspectives on what you think the industry is going through and how banks and financial services firms are responding to it, especially from a tourist context as well.
Sure, happy to go there. So, I mean, it's interesting, right? Each, to your point, Dennis, crisis is really an opportunity, and never waste it. You do learn, from it. And in our case, being a regulated industry, we obviously also have the benefit of the regulatory perspective, which, as you probably all know, continues to evolve, continues to be more stringent. I do believe that those are actually mutually reinforcing phenomena. And so, the regulation that we're all contemplating is actually accretive to the industry's overall strength and the stability it provides to our economy more broadly. But if you look at the previous crises, things were more rooted in a credit, weakness, or a dot-com bubble, or we had these exotic instruments like CDOs and CLOs that spread very rapidly, although still rooted, sort of the underpinning still was over leverage in real estate. And so what we've learned through what transpired starting March 8th, March 9th, with Silicon Valley Bank and then other institutions, is more back to the basics, that liquidity matters, capital management matters, concentration of your assets or concentration of your exposure to certain industries matter. What portfolio of your deposit is insured versus not insured matters, because that creates the psyche, that creates the risk of a deposit run. And like we've learned many, many times in history, that ultimately is a vote of confidence, and a crisis in confidence can take, frankly, any bank down. And so, those are obviously some of the more, obvious issues. But then also there were certain regulatory matters that between the regulatory agencies and the management, as well as the board of these institutions, should have acted with even a greater sense of urgency. So anyway, all that to say, it's back to, it's sort of a two-pronged thing. It's back to the basics. So obviously you got to make sure that your credit book is as pristine, or as the asset quality is solid, or within your risk-adjusted sort of appetite. And then liquidity and capital matters, that you've beefed up your liquidity and capital profile, that you can account for unrealized losses on your securities portfolio, or on certain, unanticipated withdrawal activities, so on and so forth. So that's sort of one front of it: prudent, robust, ongoing risk management, right? We've seen previous crises with compliance, with AML, with BSA, with credit, and today it's back to liquidity and capital. And on the front foot, on the more offense side, so less on the defense side, is more around really engaging clients. It's about client engagement. At Truist, we're a very purpose-driven institution. I echo Dennis's comments and what Mike from Grasshopper shared earlier about culture. And so Truist prides itself on having a very, very purpose-driven culture. It's deeply authentic, permeates all levels of the organization, all areas of the company. And part of that is about inspiring and building better lives and communities. And so you do that with really, offering the best value proposition for your clients by engaging actively in the communities. We recently launched, a product called Truist One that allows us to afford to, underrepresented sectors of the economy and our client base, or potential client base, the opportunity to be part of the financial services space. And so you're much more inclusive, and you're much more consumer friendly by making sure that your fee structure is such that you're not really, charging a bevy of overdraft fees and really hoping or counting on clients to unfortunately run into that kind of financial hardship, and that then in turn translates into fee income for banks. Now obviously that is happening in different ways across the industry, but we've got our own sort of quote unquote purpose-driven way of addressing that. So I'll just end with one of the mantras we live by, Dennis, you know this well, is T3, that technology and touch in combination drive deeper trust with all our stakeholders, and in this case particularly clients. And so we're very focused on that aspect of not being digital only, but being digital first, and really taking out the friction, making us an easy place to work with, and taking out the friction with our clients. So clients and communities is sort of on the offense side, and risk management is more on our defense side, and that's really what is happening throughout the industry, and then each bank is doing it in its own sort of purpose-driven fashion. So hope that helps.
That makes a lot of sense, Raj. I think, from just to give kind of my perspective as well, right, on how banks are responding to the crisis and what's happening. And in fact, I recently read a HB article, which has looked at a lot of previous crises that have happened, and typically about 10 to 15% of the companies or enterprises emerge out of the crisis better, stronger, more successful than what they were before entering the crisis, right? About 70-75% kind of emerge out at the same state, maybe slightly lower, and about remaining 10 to 15% actually fail or go through very troubled times. And I think it all depends, as Raj, you rightly said, the strategy from an offensive and a defensive perspective, right? And we see that playing out in the market today. There are a lot of financial services institutions that are really doubling down, right, in terms of not just showing up from a risk management and a defense point of view, but really investing in building new capabilities, investing in new growth businesses, and investing in areas where they can make a significant impact to the communities and regain the trust, regain the confidence if there is an impact to that, right? So there are several firms, even today, in today's environment, really pushing the envelope on transformation and being more oriented towards the future, trying to make the most of the current environment. There are obviously companies and firms in the financial services industry that have put in place put in motion the recession playbook, right? Focus on cost, focus on efficiencies, focused on making sure many of them are listed entities, so they don't have the liberty that Mike at Grasshopper Bank has, but they have to deliver quarter on quarter. So those things come into play. But even that, they're doing it with the intention of making sure that they emerge from the crisis much more stronger, right? And we see a lot of change happening around that, technology and operations really coming together to really looking at front-to-back transformation. A lot of the work in the past was just on the front-end experience, but now firms are investing really to look at more the middle and back-end processes as well, and how do you, for example, reduce the time to open an account or to deliver certain services end-to-end in a significant way. And all of that not just improves the customer experience, but also brings significant efficiency in running the business and from a cost and a timeline perspective. So really it's a mixed bag, right? You see firms that are still in an investment mode in different areas where they really see growth opportunities, and you see some companies more internally focused on the efficiency agenda. And there are obviously still a few that don't know what to do, right? Those are maybe slightly more dangerous, where they're still trying to figure out whether what will happen in the market and how they should respond. And I think our suggestion to everybody is to continue to be focused from a long-term future perspective and find ways to manage the situation in the short term. And I think that will pave a good way forward. A great example of kind of fintech, big tech, banks coming together in the recent past was what in the current environment what Apple did, right, with launching their high yield savings product. And they used Goldman Sachs markers as a bank as a service, and they were able to get $1 billion of deposits in just 4 days, and that continued to grow over a period of time. These are published numbers. So I think that's a great example of how companies are trying to make the most of the opportunity as well. So with that, Raj, that's kind of here and now, right? How things are going today, what needs to be done. But looking a bit into the future, right? If we get a crystal ball and are gazing forward, what kind of do you think in the next 3 to 5 years are some of the big trends shaping the industry, and what members of the community here should be really thinking of looking into the future?
Great, and I loved what you just did. So, you talked about from your vantage point how you're seeing institutions
Absolutely.
respond to the current environment. So, right at the end of my comments, I'd love for you to chime in.
Sure.
Again, as you work with institutions globally, what you are seeing. But from my vantage point, it's I began to go there already with T3, so technology and touch to drive trust. And what does that really mean, right? So that really means leveraging the power of all the flavors of technology. Dennis, you touched a little bit on it. So, it could be the more, shiny new object that drives client interaction, typically one associates that with innovation, but also the innovation of how, like to your point, looking at it from a end-to-end experience standpoint. So you really got to take out the friction through the entire journey. And so not only working with clients to make the front end digital, in some products we have 95% adjudication and decisioning and approval for a lending product. In some others, we might have it in the 50s. Why is that the case? I mean, obviously it varies depending on riskiness of the borrower and product type and so on and so forth. But you know, the front end is very important to the client, and then the innovation of how, like how you make the process straight through. And you can take any process. You can take a deposit process, a payments process, a consumer process, a wholesale process, a lending process, even default management or collections process, and think about where are there friction points. And so it could be robotics process automation at its most simple and rudimentary level, where the underlying fundamental systems of record are not talking to each other. And so how do you transport data in a much more efficacious, higher integrity fashion? Then you move to the other end of the spectrum, and you've got obviously AI and machine learning, and we can even talk about generative AI, right? But we are already, all of us, every industry, take airlines, take retail, even the robots that are providing food delivery in downtown, right? They can go for a mile. I think it takes about 20 minutes to go for a mile. But even those simple robots, like those that walk around on the sidewalk, I mean, they've got large language models. They've got AI embedded in I don't know how many, let's say a dozen or so, right? So it's everywhere. And so obviously for us, it's around, what is our value proposition vis-a-vis our clients? And so, how do we provide insights and advice to our clients, be it in wealth management or asset management or a financing structure? It could be in client service, which could be in a brand channel, could be in a care center where a call is coming in, obviously could be via mobile or your website. So what is it that the client is trying to solve? And helping our quote-unquote agents, for example, instead of scrambling through 8 screens that take 68 seconds, you can get the most likely answer in 11 seconds, and then also provide real-time coaching to our agents in terms of what is the sentiment. When you look at the plethora of communications with our clients, be it through transaction history or emails or social media or whatever, right? There's, is this a client that's delighted? Is this client engaged? Or is there an underlying issue where it's a complaint, and is that issue systemic, or is it, sort of idiosyncratic? Is it one-off? All of those, so AI transcends all of that. It's for risk management, for fraud detection and prevention, it's for client service, it's for marketing. So it's happening all over the place. But you can only do that if your data is of sound integrity. And so that's sort of the third piece of the puzzle, right? So it's the innovation of the front end and the how. It's all aspects of the technology stack or spectrum. It's about the data and making sure that you are informing your technology stack and your decisions and your actions with reliable, high integrity data that also then is held in confidence, and there's no breach, so on and so forth. So those are, I would say, again, not unique to financial services. In some cases, we're ahead because we've got a lot of information, a lot of data. In some cases, we're behind some of the other industries. And by the way, partnerships with firms like Infosys, partnership with the fintech community, RegTech community. We talked about risk management a little while ago. All that is, that kind of, co-opetition or whatever is really here to stay, right? Where we have the relationships, we have the scale, the fintech's got the agility, has got some of the ideas. And so how do we continue to make that a fruitful and productive partnership? So those would be some of the things.
Sure. No, thanks, Raj. And I think, what I really liked in your narrative is it's about, real stuff, real use cases. Yes, the future needs to be transformative, but it's not rocket science stuff, right? It's back to basics, doing things better, doing things in a much more client-friendly and optimized way. And I think one of the trends from our perspective in the industry, what we really see, and I personally think will be very, very disruptive, again, in getting simple things done in the best possible way, is around generative AI, right? And while it is becoming a buzzword again, I think it is certainly beyond just a buzzword. And some of this has been in place already for a long time, right? There are virtual chat assistants, chatbots, etc., that banks and financial services firms have had for a long time. But I think leveraging the power of data and language models, the ability to do a lot more, right? Amplify what can be done through generative AI is exponential. And you already see, a lot of very, very interesting use cases coming in the market. Morgan Stanley, for example, has used it for their advisors, right? For advisors internally, 17,000 wealth advisors to query on their internal, policies and contracts, et cetera, and recommend to their clients. Bloomberg has announced Bloomberg GPT, JP Morgan Chase has announced Index GPT, and so on. So there are a lot of firms trying to, make the most of what the capabilities are. And from an Infosys perspective, also we feel that this can be truly very disruptive, right, in the future. In the work that happens on the technology side itself, right, using some of the tools like Copilot and others, the productivity of developers, coders, etc., can significantly enhance. But also, we actually call it AI twin for everybody. Our view is that all of us should have a kind of an AI twin that can amplify the potential of what we can do. And that could be in our day-to-day work, in our personal life, in our professional life, in how we manage our finances, and so on and so forth. So I think this concept of AI for everybody and really the consumerization of AI is going to significantly impact how financial services businesses operate in the future. And of course, the large firms, the mid-sized firms have a big role to play, but a lot of the fintechs will also benefit significantly from there, and some of their offerings will be much more tuned to that. And talking about fintechs, Raj, I think from a tourist perspective, you do a lot in partnerships with fintechs as well. Maybe you want to share some examples on that.
Yeah, just sure. Happy to go there. Just to finish the generative AI thought, you highlighted all the promise and the potential, but maybe you can blame me to be a stodgy banker. But being in a regulated industry, obviously I'm a huge subscriber to the thesis of the promise and potential of generative AI. It, however, does come with real risks, which we have to be supremely mindful of and actively mitigate, right? So whatever there might be exacerbated cyber issues or data issues or reproducibility and auditability issues because you get a different answer every time. You get these hallucinations, like nonsensical answers. I mean, you can test it, right? You can go and type a question like, hey, are cow eggs bigger than chicken eggs? And try it, and it'll give you an answer. And so, anyway, it comes with risks, and so at least you're right about JP Morgan, Morgan Stanley, all the trillion dollar banks in that weight class absolutely are, and by the way, so are we at Truist, are beginning to think about, contemplate use cases, but in a more sort of ring-fenced zone, where the data, going back to my data comment, it's about not just sort of a free-for-all that, hey, let's just go out to the World Wide Web and let ChatGPT come up with our equity research report, right? So that's,
I hope not.
Exactly. So so it's more about how, like, I think some of the use cases you highlighted, how about organizing, how about summarizing, how about combining
customer service,
the productivity that generative AI affords you with the human dimension. And so there was an interesting statistic I'd read that for 80% of our workforce, generative AI is going to take out like 10% of their activities, and for 19% of the workforce is going to take out almost 50% of their activities. So it's going to have a dramatic impact, and it's going to affect everything. anyway, my main point was that there are
Yes.
risks we got to be mindful.
No, absolutely. And I
So-
think, that space will evolve and absolutely very important from a data privacy perspective and a risk management perspective, especially in financial services industry.
And phishing and
Yeah.
deep fakes, I mean, bad actors can leverage that same power. And so it's just like our race with viruses, COVID or any other virus, right? The humans, we are in a race with viruses and who wins and who
Yes.
falls behind. And it's same thing with technology. The bad actors leverage this technology.
Yes, yes.
And so how do we stay ahead?
So Raj, I'm also looking at the questions that are coming in, and I
Oh,
think
sorry,
I
yeah,
asked,
yeah.
but I think a similar thing, like how does Truist partner with fintech startups from Steve?
Okay.
So that'll be great to.
Happy to go there. So all all the trillion-dollar banks, plus, I spent 15 years at Wells Fargo, and so everyone has a team of, let's say, between 10 to 20 folks focused on ventures and technology, particularly fintech partnerships. And so Truist similarly has a group that focuses on fintech partnerships. We've made about 15 to 20 investments. Just a couple of quick examples. Long Game is a gaming app. It's really sort of a combination of behavioral economics and gamification, but it really allows us to reach a different generation, a different profile, a different persona of clients or potential clients, and then how do you use games to actually build healthy habits and financial wellness. And so we've combined, after acquiring Long Game, we've combined that with Truist deposit products. More recently, and I saw there were some representatives from Method today in the conference, and so recently, Method had a big Series A round of financing. Truist participated in that, and so that is another good example of how do we test some of these innovative technologies, bring it to scale, but also congruent with our purpose-driven culture. And so in this case, it's about developers really, being able to do debt consolidation, balance, transfers and payoffs in a much more seamless fashion. And so, so it's an evolving thing. I would say our main themes are around digitization, around process, mining, automation, discovery, about data, understanding unstructured data, cyber for sure. It's not very different from some of the bigger banks, but those are some of the thematic areas where we continue to explore our partnerships with the fintech community. And one thing you're very familiar with, Dennis, last thing I'll say is Zaloni, or the Arena data governance platform. I know I'm harping on the data theme, but anyway, that is something that has allowed us to leapfrog, by 18 months, our own agenda on strengthened data governance.
Oh, that's good. I think there was a question on top 3 fintech solutions you're looking for from Daniel, and I think you just answered that. What are the focus areas? I think there's another question here around, how do you compare the innovation environment in US to rest of the world? And maybe I can
That's a question
take
for you,
that.
I
And
think.
I think, obviously, in my role, I get a global perspective of what's happening around the world and at Infosys as well. And it's very fascinating, right, to see in the financial services industry. I feel in the US, obviously, there's a lot of innovation around the whole, digital transformation, but user experience, really providing the best experience for customers and so on. I think if you look at from a European perspective, there was a lot of focus around, open banking-led innovation. It was, pushed by the regulators as well, but a lot of the firms there locally very much into that. Also on ESG, making ESG real, right? Not just something that's on the reporting side, but really making it core to the business. We feel that, that's a huge thrust in Europe. But to be really honest, right, I think the real innovation in banking and financial services in the last few years is actually happening in Asia. Right? If you look at countries like Singapore, India, I think the pace of innovation in the banking and financial services world there is just tremendous, right? And I'm also very passionate about especially the innovation in India, and maybe a bit biased as well. But I think, and some of you may know this, right? The entire stack in a country like India, which is facilitated by public-private partnership, is getting transformed, right? It started with the digital identity, where 1.2 billion people now have what is called Aadhaar, social security number equivalent, but much more secure, right? So the 10 fingerprints and the iris scans are all stored in a central database, and it has been done for almost 90% of the population, and that is used, that has unlocked tremendous value, right? So that is used, for example, for KYC, for opening a bank account. In 30 seconds, through online real-time authentication, firms can open a new bank account because of that infrastructure around digital identity. I think the second area of very, very significant innovation has been around payments, right? A consortium of banks supported by the government created a UPI, Unified Payment Interface, which has unlocked tremendous value in terms of the adoption of digital payments. Just last month, I checked this morning, 92 billion transactions happened in a month on UPI using the payments platform. That's kind of more than US, China, UK combined, right, in terms of the adoption of digital payments. So huge innovation, and it's all kind of open API-based architecture. So anybody can literally connect and build, whether you're in the retail industry, in the hospitality industry, or financial services industry. It allows you an open platform to really build applications using the payment network. And various other things, right? There's something called a consent layer, which really helps from a data perspective to ensure, what information you want to share, not share, and allow for aggregation. So a lot of the innovation in financial services is really happening, in Asia, and a lot of learnings from there. The fact that, sitting here, I can make a payment transaction to somebody, which will happen online, real time, at no cost. And that has completely transformed the way in which the country operates. The last thing I'll say, because of all of that, right, almost from about 25% of the population being part of the financial ecosystem, now close to 80% of the population in a country like India is part of the formal financial ecosystem. And that's why in today's environment, while there are talks of recession and inflation and financial crisis in many different parts of the world, the economy in India is actually growing by 7 or 8%, right? So it has created a tremendous innovation ecosystem and thrust that has changed the marketplace. So yeah, as you can see, quite passionate about the innovation happening around the world, but especially in certain countries in Asia. I think Raj, just to we have about 5 minutes left. Wanted to cover a few questions that were other coming in as well, and there were a couple of questions around metaverse, right? What do you see the role of AR, VR, metaverse in financial services? And also, there's a related question. Young people don't want to go to brick and mortar branches. They're not crazy about websites and even mobile apps. How do you engage with them? And probably metaverse is the answer. Maybe any thoughts on that? How do you do more with something like metaverse?
Yeah, it's untapped. Obviously, potential is untapped. There again is promise. I have to think that one day it'll be equal to or superior to an in-person experience. I'm still trying to fathom that and imagine that. Obviously, that's somewhere far out in the or further out in the future. It's today that's not the case, right? And so, but there's a lot of applicability. There are a lot of use cases. You can simulate and you can have journeys or experiences where clients can interact with a subject matter expert that is sitting, in a different place. And so you can get that advice, you can get those insights, you can conduct training. How do you sort of, when you look at your performance and why are certain people operating in quartile 1 or 2 versus others in 3 and 4. So there are a lot of use cases, practical use cases with tangible impact and upside. But the in-person experience today is still the right approach for consummating finally the sort of a moment of truth kind of transaction. So actually, I welcome your thoughts on that.
Yeah, I mean, I feel obviously there is applicability of metaverse in banking, but it's applicable in many other fields as well, right? Including what we at Infosys do is a lot in the field of sports. Right, we are big supporters of tennis and basketball, and for example, in Australian Open tennis tournament, which kind of Infosys is a sponsor, one of the sponsors, we are providing the ability to watch the games using AR/VR. You can decide which spot in the stadium you want, what seat you want, what angle you want, and real time you can get a view of the game. And that's probably the future of how sports would be, where you can choose when to watch, where to watch from, how to watch. Having said that, my personal view is that while the metaverse experience is great and there will be many of us who will love it at times, but it does not completely replace forever the physical experience, right? We are also sponsors of Roland Garros French Open. I was actually there last weekend and in Paris, and the feeling of being there in the stadium to see Djokovic break the world record of 23 Grand Slams, I don't think can be repeated in the metaverse, right? So it's always a balance of what you can do in the metaverse versus what needs to be done in the real world, and I think both need to coexist. And I think there is opportunity for several use cases in banking and financial services on the metaverse as well. Raj, maybe to finally kind of wrap it up, right? And the theme of this event is also around community and how do we work more closely together. I know you are very passionate and very active in the Charlotte community through a couple of roles. One is the Tourist Foundation, but also in your role as the chair of the World Affairs Council of Charlotte. Any messages for this group here on what to do more in the local community?
Well, I think, Dennis, you said it at the outset, Infosys, Truist, we all want to inspire and build better lives and communities, and we're only as successful as our communities. So community engagement is always a big part of, I think, and even more so with this generation, where having a purpose is becoming even more important. And so, yeah, I'm just, I've served on a variety of not-for-profits, and it's been supremely rewarding and fulfilling. The World Affairs Council's, mission is to promote global understanding, international awareness. So you should just choose your passion. I think you said it at the outset, and Mike also said it earlier today. So find your own purpose. You have a professional purpose, you have a personal purpose. Hopefully there's a lot of alignment and convergence and congruence in that. But it is the most, just this past weekend, I decided to I'd gone to the Salvation Army a few months ago. I went to a local community shelter, just to cook, prepare breakfast, serve breakfast. And no one asked me to do it. It wasn't a work thing. It was just with a bunch of friends. And so, World Affairs Council seems kind of lofty. We have CEOs coming and talking, ambassadors coming and talking. But really, it could be anything. And so it is just a great way to start and end the day. Some level of meditation, some kind of gratitude and giving back just grounds you, centers you, and just makes you a better all-around person. So
no, I think, and that's all very important from navigating change perspective as well. Also from Infosys point of view, we have Infosys Foundation USA that works very closely, right? We focus on especially on education and learning. So we offer a lot of opportunities for K-12 teachers, for STEM education, maker education, which we believe then passes on to students. And we do a lot of local partnerships in the state of North Carolina and beyond around education and learning. So my final thing, Raj, we are in Charlotte, we're talking about community. I think, if I'm not wrong, you lived in New York as well for several years and moved to Charlotte. I've also lived globally and now live in Charlotte. So is Charlotte the new financial capital compared to New York or any other place?
Oh gosh, yeah. I don't know whether I'm qualified to answer that, but Charlotte's certainly home for me and my family. I think New York is, by statistics, will remain today the financial capital, but obviously, I don't think folks realize that Charlotte has 91,000 financial services jobs here. Healthcare, of course, is big. Technology is getting bigger. Finally, we're getting a medical school, which any top 20 city in the country should have. We are blessed with great education, great infrastructure, great healthcare, great transportation, and so there's tremendous upside. I mean, I know I'll miss names if I rattle off all the financial institutions who are here and want to grow here. in addition to Bank of America and Wells Fargo and Truist and Bright House and LPL and TIAA and Barings and I mean the Regions and USA and this list goes on, which is a testament to how lucky we are that we are in a special community. So it's great that we have two vibrant hubs in the country in financial services.
No, I completely agree with you. I think it's a great place to work, great place to live. And, as you know, I recently took over the global role, and a lot of people ask me, right, oh, so you have a global role now in financial services, are you going to move to New York, are you going to move to London? And I'm like, why would I? As long as, and that was the only condition that my wife had, that as long as we can stay in Charlotte, you can do whatever you want.
Congratulations on your, it's awesome.
Thanks,
Infosys
Raj.
is lucky to have you play that important role.
Thanks, Raj. And I think, so we all, I think there's a tremendous platform in Charlotte for the financial services, banking and fintech industry. And, both at Truist and at Infosys, and I'm sure many other organizations, we have, major plans continuing to expand in this market and really strengthen the ecosystem. So I think we're almost at time. Thank you again, Raj. Was great to have this conversation. I really loved your opening around offense and defense in the current environment and the T3 strategy that Truist adopts. And it's always been a pleasure to partner with you and for all of us to work with the local community and contribute to whatever best we can. Thank you very much.
Thank you. Thank you.
Please welcome Teresa Burton.
Hi, I got the distinct pleasure to introduce the next session, which is such a great name, Wake and Bake. Wake and Bank, right? Oops. You think I did that on purpose? Maybe, maybe not. So we're talking about wealth tech in the cannabis industry. And so this is a very interesting topic. I think, there's a lot of things going on here, regulatory issues, and all kinds of things. So I wanted to give a shout out to Mike Baird, who is the co-founder of Infused Banking. He was supposed to join us and was unable to. So just want to give a quick shout out because if you have any interest in this industry, cannabis and the financial banking, payments, all that stuff around it, Infused Banking is a great place, great resource, a nonprofit for training, providing a platform, and sharing, collaborating in that industry. So thanks, Mike, for what you guys do. So it is another great pleasure for me to introduce an EY colleague who is going to be the moderator for this session. He is Mike DiStefano, if I pronounced that correctly. He is a partner with EY. He's also the private leader for the South region of our financial services office. He is a great proponent of entrepreneurs and fintechs and private middle market companies. He is our EY Global Alumni Leader, and he works with our esteemed alum, including our special guest today. So, Mike, come on out.